Good morning. It's Jeffrey Christian, CPM Group. It's the morning of February 3rd, 2021. Very important date. It's my birthday, as well as the Feast of St. Blaise, the patron saint of throat health. I wanted to talk a little bit about silver. It's kind of passé at this point, but it's also relevant. You can see some notes here that we wrote for internal consumption on the morning of February 1st, Monday, February 1st. And a lot of things that we said would happen have happened. Margins have been increased. There were trading impositions on silver ETFs, which have since been relaxed, and a variety of other things. If you go back to the video that we posted on Friday, 29th of January, we talked about silver and what was going on with the Wall Street bets people and the Reddit folk driving the price up. And since that time, we had 2 days up, Thursday, Friday. The price got up to about $30, a little over $30. And then you have had 2 days down with the major decline on Monday. We actually issued a commentary on Monday talking about at $30, one should buy puts with the expectation that the price would fall. And one person I know actually did buy some puts Friday morning, and they were up 70% by Tuesday morning, and he was letting it ride because he thought the price would decline a little bit more. So we talked about that there. Also, in that conversation, we talked a little bit about how there aren't the kinds of naked shorts that the Wall Street bets people and the silver conspiracy people think. And you know, the point that we make is if you look at the COMEX futures and options, you see as of last Tuesday, the last data that's publicly available, there's about 610 million ounces of short positions on the COMEX silver futures and options that were from commercial entities. And most of those commercial entities are banks and bullion dealers. There were another 152 million ounces or so that were shorts by institutional investors. And those institutional investors, they're investing and or speculating, depending on how you want to use the term speculating, short-term investments. They were expecting the price to fall. So some of those may actually have been naked shorts. In reality, what CPM Group does with its institutional investor clients is if we're buying a put, we're probably paying for it with an out of the money call spread. So it's actually not a naked short. So even those institutional investors probably weren't all naked. But if you look at the commercial banks and brokerage houses and dealers, which is the bulk of the short position, 600 plus million ounces as of last Tuesday, what you find is that they almost entirely are hedged. And in fact, those short positions on the COMEX are the hedges of their long physical positions. I used to have a good friend who was in charge of the largest silver trading company bank at the time, and people used to say that he had the largest short position in silver in the world. And he always laughed over private conversations as I do, but they don't realize I also have the largest silver long position because I have these physical markets, physical positions, because I'm a market maker and because I'm leasing metal out to miners, smelters, refiners, and all sorts of fabricators and other people who want to lease metal out because that's the way it goes. Now, when I talked about that on Friday, that stimulated a couple commentaries. And if you go to the commentaries below last Friday's thing, you'll see some discussion where, so I said, what do you mean by leasing? I won't bore you with the details here. I've been trying to explain leasing to silver producers and silver conspiracy theorists and others for 40 years now. And even brought out one of the largest leasers of silver as a silver fabricator to a meeting in Coeur d'Alene, Idaho 15, 16 years ago, so that he and I could try to explain it to some mining executives out there unsuccessfully. But there is a discussion there about that. And you need to know that because that explains a lot of what was going on. Silver is a commodity, and commodities are not stocks, and silver and gold are not pure commodities. They're financial assets, and they're not stocks, and they trade differently. And one of the things that the Reddit boys got wrong over the last 4 days is that silver, silver futures and options trade in the CFTC regulated COMEX. Silver ETFs trade on the SEC regulated stock market. And there's radically different rules and policies and practices. And then you also have OTC markets, which are largely unregulated in the United States. It's corporate law. In the UK, it's the FCA and the Bank of England behind it. But in the stock market, you'll have a lot more naked shorts. Investors who borrow stocks and sell them short at the expectation that the price, sell them with the expectation that the price is going to fall and they can buy those stocks back and return them to the person from whom they lent them at a lower price and a profit. In the silver market, on the futures and options and in the forwards and OTC options markets, you can just go short. And, there's nothing wrong with that. And it can be very profitable, as it was on Monday, and as it was for 67% of the time from 1980 to 2000, according to our track record. In gold, I think it was probably even higher in silver. So you have a lot of groups that are short on the futures and options market that actually don't have naked shorts. And as the price rises, it doesn't hurt them because they're long the physical metal, they're short the futures and options. And as the price rises, the value of their physical metal rises while they have a mark-to-market loss on the futures and options. And being relatively smarter people, they know not to capitalize those losses by liquidating those short positions when the market moves against them. They know to wait and the market will move back and those mark-to-market paper losses will disappear. Higher prices actually are good for them because they make their money primarily, they're not speculating on the price of silver, they're hedging it. They make their money by leasing that silver out to companies that want to borrow it in during the fabrication process. And while they're doing that, they earn an interest. Now, if you're earning 3% at $20 an ounce, that's good. But if you're earning 3% at $27, as is the price today, or $30, as is the price briefly on Monday morning, you're earning more. So you'll see periods of time. For example, Eric Sprott was trying to tell people buy silver and bankrupt JP Morgan about 10 years ago. They even had a barge that said something to that effect in the Thames. And it was ludicrous. And it was a marketing spiel for Sprott at the time. And in fact, the prices of gold and silver rose at that time. And JP Morgan had record profits. Why? Because it makes its profits or losses based on rising interest rates and the rising payments from those little bitty interest rates that they charge on metals. And then, they were records at the time, record profits at the time. I believe that they actually had even higher records profits in their silver trading and gold trading last year because the prices were higher. So you can go back to that and you can read a little bit about leasing and understand what's going on. We've also made comments on BNN yesterday, SOAR Financial website yesterday. Financial Sense and Corlin have interviewed us, and they'll be posting their things probably on the weekend. And the various other people have been interviewing us. And we've been explaining margins and why margins rise and fall, and how the importance of a clearinghouse is important, and how the clearinghouse on the COMEX is much better constructed and much more efficient and effective than whatever clearing operations Robinhood had. And a lot of the problems that you saw with GameStop and AMC and SLV at Robinhood had to do with the fact that it had an inappropriately set up system for margins and clearing, which allowed people to gain its margins and have even bigger speculative positions. So that's a lot of what's been going on in the silver market. We have been bullish on silver. We continue to be bullish on silver. A lot of people keep talking about how silver coins and small bars are in short supply now, as if that's part of what went on in the last 4 days. It's not. US Silver Eagle was on allocation before Thursday of last week because investment demand has been very strong. I think I said it last week, I'll say it again. Investment demand for silver, physical silver last year was more than 100 million ounces of silver bought by investors. SLVs, 1,000-ounce bars, and a lot of small bars and coins, a lot of coins. That was more than triple what you saw in 2018, 2019, when net investment demand was about 27 to 36 million ounces. So you've seen a big increase in investment demand, 2018, 19, 20 into 2021. And that has caused the silver price to rise, and it's caused tightness in the markets for those small bars. There's plenty of 1,000-ounce bars around. In fact, 1,000-ounce bars are at record inventory levels in London, New York, and Shanghai. Not really Shanghai, it's like 56 cities around the country in China. But you have record inventories of 1,000-ounce bars. So there's plenty of silver in the wholesale market. And where you're seeing the tightness is in the coins and small bars that smaller investors buy. And not just smaller investors, you know, I prefer silver coins and gold coins for a lot of my physical investments personally. So you're seeing that. We're still bullish on silver, but we're realistic bullish. We're seeing a price that's probably going to, in our view, maybe consolidate around $25, $26 with an upward bias. I wouldn't be surprised to see the price trade up to $28 and all. You have an active March contract on the COMEX, so you might see a spike higher in silver prices in the second half of February. Longer term, we think the price of silver will go a lot higher, but we think that, you know, the last 4 days was something of an aberration, and the price got ahead of the market. Now it's coming back, and it's probably going to reflect the real market the way it did prior to last Thursday and going forward. That's about all I have to say for silver today. We'll follow up with another video probably this Thursday or Friday. Take care, stay clean, stay safe.